Hi guys, today we'll be discussing very important but meantime very boring topic for every trader: risk management. But today I know I'm not planning to speak too much about theory because if you want you can find a lot of materials about it in YouTube or in Google. So I will try to use this risk management tools more in practice. I mean, I will show you how by managing these tools you can minimize the risk which you can have during the trading process. But before going to detail, let's have a look first of all why risk management is very important, because almost 99% of beginners lose their funds in Forex and CFD when they start trading. And what's actually the main reason? The main reason is that they first trade, they make mistakes, and after that they start asking questions why. So what are the main reasons? The lack of knowledge, random trade decisions, absence of money management tools, emotional trading and greediness, and of course sometimes the lack of capital. I mean, not sufficient startup capital. So what information you need to gain first before starting to trade? Most of all, you should pay attention Forex terms for trading, basic rules of money management, basics of market analysis, and of course sometimes how to exit the trades when necessary. So about Forex terms, I will not go details. Well, you can find more information from the link under description. If you go to the link, you'll be able to get the full presentation. Of course, over there I'm explaining what's the bid price, what's the spread, what's swap, leverage, margin, load, equity, margin level, stop loss, take profit. However, what I'm planning to do is, and of course the steps, right? The summary for a step, what you need to do before ready you execute a trade. However, what I'm planning to do now, I'm planning to give more information on the chart while we'll try even to take some trades. Here we go. What are more detailed information? First of all, what we should do first, it's very important. I mean, in trading for all the time, not depending you're a newcomer or you are a professional trader. The most important thing to make sure that you follow the trend. I mean, you don't go against the trend. So that's why understanding the basics of trading is very important. So why it's very important, first of all we'll talk about what's Forex or CFD by itself. So Forex and CFD, it's a leverage trading. So let me open for you, for maybe there are some people watching this first time or just doing Forex for first time. So what's a leverage? Let's assume you buy US oil. So current price for US oil equals, let's say, for $35 per barrel. Okay, so for instance, most of brokers, I mean retail brokers, offer for one lot 10,000 barrels. So what's a barrel? I think everybody knows, just kind of tin, right? Metal tin where, right, you carry, I mean, you simply sell, right, the oil. So it means that for someone, for instance, for getting, I mean, for simply for investing, right, for into the oil market, let's say to take right, in order to take 10,000 barrels of oil, they simply need to have $30,000, so it's $5,000. So $35,000 simply dollar the price which you need to pay. I mean, simply, right, to get in normal situation 10,000 barrels of oil in the market. So what's the advantage of the Forex? For example, the standard leverage for the oil for commodity futures, for example, can stand from 1 to 100 to 1 to 200, which means in order to get the margin. What's margin? Margin is the minimum investment which you need to invest for taking, right, this volume in the market. So you simply take 35,000, the real price, and you divide it to 200, and you will have, right, the price which is necessary for you, to have in your balance, which may make 35,000. We simply divide it to 100, $175. So $175, the amount which is required to to take 10,000 barrel contract in the market. So this is the main problem why we should know the risk management, because it means, yes, let's assume I have a balance of $500. So with balance of $500, which means I can take, I can easily afford myself to take 10,000 barrels. However, it doesn't mean I will feel myself in safety. Why? Because, for instance, very easy to do. We can go from this platform. We can go and find the oil, for instance. Let's just have a look at the graph of oil. Let's maximize it. Okay, so we can see, for example, the graph candlesticks for 1 hour. I will make it, for instance, just 1 day time frame. Let's just check. I'm using my mouse wheel and checking the volatility during the day. So approximate volatility for me will be, if I'm just say having a look here, between the minimum price to the maximum. For the oil, it will be 1.05 pips. So it's approximately $1 just for the past. But sometime even we had the situation, for instance, if you check the minimum price, or let's do it this way, I will simply add here just horizontal lines to make it easy for you to understand. For example, we had a start price of 25.80, and then the upper shadow we can see was standing at 35.96, which means we had, for example, beginning middle of the March, the volatility which was exceeding $10 during the day. So now what does it mean for a CFD trader? It means if 1 barrel of oil is moving $10 minus $10, let's assume, for instance, I was selling, or market when they gave me, right, just like that, $10. So for 10,000 barrels it will be how much? $10,000. So of course, if I'm starting with this amount, if I start with 500, I'm using just only a small amount, right? For me, like 40% from that, I use a margin I'm taking that day, right? I can simply drain my balance when oil will go against me like this, because even right, I will not see my balance will not see the $10 movement. In our situation, even $1 movement can cause me problems. So that's why when you start trading, pay attention to the leverage which you're taking, the margin level percentage. So how you get the margin level percentage is very easy to do. You just get your equity. What's equity? Equity means balance plus okay, made some mistakes there. Balance plus ongoing P&L. P&L, it's current profit and loss, right? What you have, we simply divide it to the margin, minimum margin, which is used by me, and I'll multiply it to 100%, and then I will have my margin level. Make sure that when you start trading, your margin level running around 1000%. Believe me guys, very important. And if your margin rate runs below that level, it means, well, anytime right when market will go against you, you can have other problems. Okay, so let's return back to my presentation and just let's understand what exactly I need to do in order just to make sure that I feel right. I mean, myself in safety, and of course, I do safe trading. Of course, one recording will not be enough. The steps are just, we can simply divide them to 6 steps. The first step is the checking the volatility of the market. So for this case, you can use the average true range, and the second step is the trend. So these 2 things were important, so that's why it will be in this part of the video we'll be discussing what these 2 things. And if you want to watch right the rest, I simply suggest you to subscribe to my channel, and of course follow my new video files. Okay, you're using MT4, or you use the web platform, or you have a trading view account. In every right platform you can find this indicator. For example, an station, it's easy to find it, and it's mostly effective with stocks, or you can use it in the Forex. How we do that? For example, we look at AUD/USD parity, and now I will just delete it. I will add it again. We go to indicators and we type average true range, ATR. You can see the appears. It's using a standard 14 time period, so you can select the color. I don't suggest you to change it, and just then we apply it. So in all currency parities except the JPY, it's easy to check the ATR. I don't just pay attention to the level which is running. What I simply care about is simply the numbers. You can see on left bottom corner, I see ATR in the brackets 14 time period. It means if I'm using a daily graph, it's looking at the last 14 candles per 1 day, and it gives me an idea in which I mean the average movement for this period. So for 14 days, I can see from the 0 decimal 1 1, I mean just it's selecting the fourth number, it will be 1 pip, so 78 pips. So it means for the last 14 days, AUD/USD parity was moving up for about 78 pips. So actually these numbers are important, because this way I can simply calculate. For instance, if I'm calculating, I will be able, I'm just checking, today it moved almost 70 pips. So based on the statistics, I have just about another 8 pips before this daily candle will be closed. And in the meantime, this number can be used very easily to identify your stop loss, which is a very important part of your risk management. How we do that in normal strategies, for example, your stop loss can be equal 1.5 multiplied to ATR, average true range, or even sometimes 2 times higher than ATR. It means, for example, for AUD/USD, it's about 78 pips, right? So we simply multiply 2, for instance, or let's say 1.5, then I will get my number. For example, let's make it together, 1.5, just multiply it to 78. So for it's 117 pips. So what does it mean for me? It means that if I start trading now, let's say this is my entry point here. Just let's have a look together. Okay, let's say if I'm just trading here, and in a distance from this point approximately let's make this way. I will just add line. Okay, let's make it more visible like this. Okay, So from this line, simply we take it in a distance of, we'll make it a little bit like this. It will be simpler, right? Our stop loss level. It means when you take a daily trade, you can use simply this basic, right, analysis. Just we simply go to default, so when we are using this kind of analysis, so this way I can simply identify my stop loss level before I simply go and take a trade. So as you can see, ATR is very important to identify the stop loss level. Another important thing for the trader to make sure that you follow the trend, as usually for this case we are using moving average lines, the EMA lines. So how we can, what kind of time period we can use, you can use actually a few. For instance, 100 time period, the standard and very popular. For example, if we will change the time frame to 4 hours, what I can see I am extremely far away from the moving average line of 100, which means we have very strong upwards movement. Now the question is how long this trend can last, and of course we simply checking, right, the levels of support and resistance just to get an idea about it. And what we can see, we will be able, right, to see simply looking at the levels. I've usually, well, the price simply stopped declining or stopped increasing, and these levels will be my levels of support and resistance and potential take profit. And what I can see, just recently broke a very strong level. For example, currently I'm running at very strong support level. Actually we can see the price, right, 2 times phase, and simply later on, right, went up, could not break, which now will be playing the function of resistance. It means that in case of breakup of this level, what I can see, I will be able to see a new buy opportunity up to the level of 0.69198. So this how actually you can manage your risk. Understanding the market, applying technical and fundamental analysis. Well, until we can talk about lots of things, I can simply tell you the standard, right, story. Care about your funds. Well, don't risk more than 1%, but let's be honest, no one likes to follow the rules. That's why what's the most important thing in terms of risk management, just to understand what exactly you do. To understand the market, and of course to understand the analysis. If you have the right information, it means that you are 1 or 2 steps ahead of the market. Okay guys, I will not waste too much of your time. Next time we'll talk about the trend analysis, more about trend analysis. Then we'll talk about more about the entry points, how we can identify the entry points to the market, and I will give you some more ideas, right, about the market, what's happening now. So I will try to make real-time session, which can be helpful even for traders who currently practicing CFD or Forex trading. Thanks for your time and attention.